Why countries are abandoning the US dollar. In 2001, more than 70 cents of every dollar held by the world's central banks was, quite literally, American money. Today, that number has fallen below 57 cents, and it's still dropping. Somewhere between those two numbers, a quiet war has been fought. Not with tanks, but with gold bars, bank transfers, and oil contracts. Almost nobody noticed it happening. But by the time you finish watching this, you'll understand why more than 30 countries are now actively trying to walk away from the currency that built the modern world. On the surface, everything still looks normal. You still price oil in dollars. You still see USD flash across every trading screen on the planet. But behind the scenes, something much bigger has already started, and it began with a single decision that most people have never even heard of. Let's rewind to February 2022. Russia invades Ukraine. Within days, Western governments do something that had never really been done at this scale before. They freeze roughly $300 billion of Russia's central bank reserves. Just like that, money Russia thought was safely sitting in foreign vaults simply vanished from its control. No war on Russian soil, no invasion. Just a few keystrokes, and a quarter of the country's entire foreign reserve was gone. Here's the part that changed everything. Every finance minister on Earth was watching, and every single one of them asked the same terrifying question. If it happened to Russia, could it happen to us? That single moment became the spark. Not propaganda, not ideology, pure fear. Because holding dollars, it turned out, wasn't just an economic choice. It was a political vulnerability. So what happened next? Central banks started quietly buying gold. Not a little, a lot. For 3 years straight, they bought more than 1,000 tons annually, over double the pace of the decade before. Gold doesn't care about sanctions. Nobody can freeze a gold bar sitting in your own vault. By 2026, the World Gold Council expects central banks to add another 800 tons, making it officially the second most held reserve asset on the planet, right behind the dollar itself. But gold is only half the story. The real transformation is happening in trade. Take the BRICS nations: Brazil, Russia, India, China, and South Africa. A decade ago, they settled less than 1/5 of their trade with each other in their own currencies. Today, that number has jumped to roughly 2/3. That means when China buys Brazilian soybeans, or Russia sells oil to India, dollars increasingly don't even enter the picture anymore. And then there's oil, the dollar's oldest and strongest weapon. For 50 years, there was an unspoken deal. Saudi Arabia sells its oil only in dollars, and in exchange, America protects the kingdom. It was called the Petrodollar system, and it's the real reason every country on Earth needed to stockpile dollars just to buy energy. But in June 2024, Saudi Arabia quietly chose not to renew that exclusive arrangement. Since then, the share of Saudi oil sold to China in yuan has climbed from 15% to 22%. Analysts at Deutsche Bank now have a name for what's replacing the petrodollar. They call it the petroyuan. Here's what almost nobody noticed. China wasn't just waiting for oil deals to shift in its favor. It was building the plumbing for an entirely parallel financial system. It's called CIPS, the Cross-Border Interbank Payment System. And think of it as China's answer to SWIFT, the network that lets banks move money internationally. By early 2026, CIPS was processing around $270 billion worth of transactions in a single month, connecting nearly 2,000 banks across more than 100 countries. For the first time, nations facing US sanctions had somewhere else to plug in. But that's only half the story. Because this isn't just about Russia and China anymore. It's spreading. India is exploring rupee-based trade mechanisms with Russia. Argentina started paying for Chinese imports in yuan to protect its shrinking reserves. Even longtime American allies are quietly diversifying, not out of hostility, but out of simple risk management. As one strategist at JP Morgan put it, the dollar's share of reserves sat closer to 60% than 70% just a few decades ago, meaning today's slide, while real, isn't completely unprecedented. But the direction of travel is unmistakable, and it's accelerating. So why does the dollar still matter so much, even now? Because dismantling 70 years of infrastructure doesn't happen overnight. The dollar still sits on one side of almost 9 out of every 10 foreign exchange trades on Earth. There's roughly $14 trillion of dollar-denominated debt held outside the United States. Debt that has to be repaid in dollars, which keeps demand alive whether countries like it or not. American treasury markets remain the deepest, most liquid financial markets in the world. There's simply no single alternative big enough, safe enough, or trusted enough to fully replace it. Not yet. But here's the bigger picture nobody wants to say out loud. De-dollarization isn't a dramatic collapse. It's a slow leak. And slow leaks are far more dangerous than explosions, because nobody feels the need to panic until the tire is already flat. Every basis point of reserve share the dollar loses is a basis point of leverage the United States loses too. Leverage over sanctions, over interest rates, over who even gets access to the global financial system at all. Think about what that means for the average American. The dollar's dominance is exactly why the US government can borrow trillions at low interest rates, while other countries pay far more for the same privilege. Economists call it the exorbitant privilege. If that privilege erodes, even gradually, borrowing gets more expensive, imported goods cost more, and the quiet subsidy that global demand for dollars has handed every American for 80 years starts to disappear. So this isn't really a story about currencies. It's a story about power. Who holds it, who's trying to take a share of it, and how quietly that shift can happen while the world keeps trading, keeps flying, keeps buying oil, seemingly as normal. The dollar isn't dying, but the era of it standing completely unchallenged, that era is already over. And the next decade will decide exactly how much of that power the United States gets to keep.